Everyone thanks Steve for never abandoning his post. Hello, Greg. I see you in the house. I'm looking forward to speaking to you. I'm making you the presenter so that we could hear your voice and you can share your screen. F.A.C.E, welcome Greg Schnell to our community. Currencies through an intermarket lens by the Canadian technician. How are you, Greg? Waiting to hear you.
Let me just crank up my mic volume a little bit. There we go.
Great, Greg. Great to meet you.
Yeah, thanks for having me on. Interesting community. I don't usually speak to a Forex group, so this will be good. I've got hopefully an interesting presentation. Tried to do something a little different. You guys probably analyzed the currencies pretty thoroughly, so I'll try and do it a little differently from a different angle, and hopefully at least provide some different perspective into the U.S. dollar and some of the other currencies.
That would be great, Greg. Like I said, anything on your radar, we cover everything. We cover indices and commodities and bonds as well. So appreciate you taking the time today. I'm always interested in how people got started in the business, who influenced them. You're a technician. Early in your career, were there any books that influenced you? Can you tell us about the early part of your journey and to how you got to where you are today?
Well, I was a geophysical technologist early in my career, and then left Shell and tried to get a couple of companies going and did that kind of stuff. And then my wife got transferred to Europe with Shell, and I became a house husband, which gave me time to analyze the markets, which was nice.
Nice.
So I did that for 4 years in Holland, living in the area near The Hague, Netherlands, and that was really outstanding. So I started to get really interested in Investors Business Daily in 2006, 2007, and bought Apple almost on the top tick. I was probably the last guy in, and proceeded to ride it down into February, losing about 20% and just going, okay, I'm in the company that just came out with an iPhone and I can't figure out how to make money in this market. So I felt pretty stupid, and that was really what spurred me on to get into technical analysis. And at that point, I went out and got my chartered market technician from the CMT Association, and with that, of course, it gives you a list of books to read. And to me, I was sitting out in the middle of Western Canada, not really understanding all of the technical stuff, and that list of books was probably so thrilling to read. I was reading it, I had no problem sitting down and reading 200-300 pages of that stuff compared to, all of price earnings ratios and that kind of thing. So I pretty much became a technician in the market crash of 2008, and I made lots of mistakes in there.
There's an old superstition, Greg, your Apple trade, that if your first trade is a bad one, it's actually good luck. And the people whose first attempt in the market is successful is usually bad luck. So maybe that played out for you, because, that way you knew it wasn't easy and you had to go back to the drawing board and come up with a method, and especially learn risk management.
Yeah, and I think the biggest issue that we've all had is that 2008, 2009 period all left us quite fearful of the markets for a period of time. I think the ones that were experienced in the room probably, made a lot of money coming out of the hole, and I think a lot of technicians were constantly waiting for another wave down, and that didn't happen. And it took me a couple of years to really get over my, I'll call it short-term thinking, and being able to place some trades and really make some upside money. So with all of that, lucky enough to get into stockcharts.com, and I work on the board of directors in Calgary with the CSTA, the Canadian Society of Technical Analysts. And so anyway, that's how I got to meet the people at stockcharts.com, and I had done a bunch of work for the CSTA by that point in time. And anyway, Chip asked me to come on and write articles about Canada. And so I was doing that for quite a while, and then I was just volunteering it, and then all of a sudden just kind of slowly merged my way into a job with stock charts, and we started traveling around the country teaching people how to use the website and that type of thing. And then just slowly, you know, so it's been 10 years just building up my trading experience and knowledge and different perspectives. And of course, I get to work with John Murphy and Martin Pring. They're both writers on stock.
Oh my gosh, sure. Yeah, Martin Pring and John Murphy. Yeah, I see the influence of looking at intermarket relationships, correlation type work as something that he was very well known for, John Murphy. I think that was his book title, about intermarket analysis.
That's right. So Murphy's written 5 books and Pring's written 20, and I'm lucky enough. I don't get to speak to John as often as Martin, but I talk to Martin 2 or 3 times a week. So
yeah, he's a legend. Really, you know, he has what, those 3 cycles. You know, where where does he think we're at in the cycle? I'm curious. I think he breaks it down into 3 types of cycles, doesn't he, Greg?
He's got 6. Yeah.
Okay.
So, and in his cycle model, he thinks we're in a raging bull and ride it. Just get on the train and ride it. Okay. And it's really interesting to be able to debate with him, because I'm not sitting in America. I'm sitting in Canada, so I don't think U.S. dollar centric as much as somebody who's investing in dollars. And so we get
it's a raging bull in what? In equities or the dollar?
In equities, we think the dollar is actually broken, and that'll be a big part of my presentation today, and how we're going to make the last stand. So maybe I'll just start rolling through a couple of slides here, and we'll get into it.
Okay, and we appreciate you preparing something special like a PowerPoint for us. So thank you, Greg. Go ahead.
Oh. Okay, so this is a little background on me. I'm a chartered market technician. I did a master's with the International Federation, writing it about the stock charts technical ranking system. So that's one of my go-to symbols that I use. We're not going to cover that a lot today, but we'll get into a few other things. I'm on the Canadian Society of Technical Analysts Board of Directors, and I run the Calgary chapter. And they were nice enough to vote me Independent Analyst of the Year this year, so that was a nice honor. I write 4 different blogs for stock charts: Commodities Countdown, the Canadian Technician. 3 of us go together and write Don't Ignore This Chart, which is just a once-a-day newsletter, and Chart Watchers, which comes out twice a month. Obviously, just a disclaimer, anything here is for educational purposes, and you're responsible for your own trades. So how to find my blogs and videos, I'll show you that in just a second, but basically everything I do is through stockcharts.com. You can click on the blogs header there. Commodities Countdown blog has 2 links in it. One is a list of 30 interesting charts that I try to keep up, and another is a link to my Vimeo feed, and then I have a Canadian Technician blog as well. So we'll go there.
I went to your Vimeo feed. I like Vimeo. Why did you charge that?
Sorry, what was that?
I went to your Vimeo. You use Vimeo, and I went there. And why did you choose Vimeo for your recordings? I'm curious.
It was Stock Charts who chose it, so they've posted all of their work there. And I don't know what the decision was to go Vimeo or YouTube, but obviously they chose Vimeo, and so I have my own channel there within the Stock Charts umbrella. But yeah, we just started posting there. I want to say roughly beginning of the year, something like that. Might not have even been that long ago. But all of our stuff is recorded now at Vimeo.
Okay.
So this is our agenda today. I'm going to do a big picture on the US dollar and why I think the US dollar is actually in a new long-term bear trend.
So this is not cyclical, because there are a lot of people saying that eventually this is going to be a great buying opportunity in the dollar. You would sell all rallies now. Go ahead.
I would say that the next rally is 4 to 5 cents, just running us up the other way, and then we're in a new bear market. And I'll get into exactly how I think that. And then gold, oil, and metals, the implications across those. There's some big, so one of the things that I like to look for through the intermarket lens with John Murphy and Martin Prink's background is watching that causation. So something happens in one market, you should start to see it in the other markets. And so I'm going to cover that off through some ETFs and international markets and see, hopefully you'll agree that there's a lot of things we're looking for. Quite a few of them have already cracked, the Aussie dollar, the Canadian dollar, the some of the international markets have already broken out. So I want to get into that and then specifically cover off how the dollar perspective is covering or hovering over some of the U.S. because a lot of the international markets have broken out on U.S. charts and not in their home country. And so just want to make sure that everybody's aware that we still have some work to do to confirm that we're in a big global bull market.
That's interesting.
Yeah, so anyway, so we're going to get into that. Okay, so Twitter, you can catch me at Schnell Investor. My email directly is gregs@stockcharts.com, and you can find me on LinkedIn. Okay, let's move on.
You're everywhere. You're everywhere, buddy.
We're everywhere. We're everywhere. Okay, so first of all, let's just jump into, if you showed up on Stock Charts, there's a tab called Free Charts, and from Free Charts is a blogs tab or a webinars tab. If you go into the blogs tab here, that's going to bring up all the latest posts, and over here on the right is all Stock Charts blogs. Commodities Countdown, Canadian Technician are the ones I write on. Don't ignore this chart, and Chart Watchers. So just a few in there, but here's the Commodities Countdown. And you could just click on here to see a list of 30 stocks that I keep up. And then here's a link to my video blog. And then Canadian Technician, more Canadian-centric articles. And this is the Vimeo page. So just if you're trying to find me, you could go and grab it anywhere. And hopefully that helps you out. Okay.
Yeah, so check Greg's charts out. They're dynamite. His videos are dynamite. Go ahead, buddy.
Okay, so what I want to cover off today is get into some real meat of the matter. We're going to start with the US dollar, really high level long-term chart. We're actually looking at a monthly chart and probably in a room of Forex traders that's never been seen. But
we have both telescopes and microscopes in here, Greg.
Okay, well, that's excellent. Well, this is the telescope. And so what we're looking at is a chart back to 1983, and just let me turn on my cursor. There we go. So what we see here is two big trends in the US dollar momentum, just using a PPO, percentage price oscillator. And basically when those trends broke, they were pretty major. Well, we broke this trend in July. Yeah. And so so the long-term momentum of the US dollar is broken, even though we haven't broken support here yet. And so this is pretty critical. But the other picture that's going on in this chart is that we had two big 10-year swings where the market basically compressed and then broke out to the upside. And so far, we've been following a pretty close perspective on this happening. The only difference is now we've actually broken below the upward momentum, whereas in the early 2000s, we continued higher.
Yeah, we held it. Yeah.
Yeah,
okay. And
so on a monthly chart, one of the big differences that we've got here is you could see in a bear market, we stay below 60 on the RSI and we stay above 40. And here we are right now, and we are at 42 on a monthly RSI, but we have a lot of divergence on the high, and we've broken the momentum. So one of the main concerns, if there's a last stand for the dollar, it's now. But we're going to get into that and just show it zooming in on the chart. So what this is this is the same chart converted to weekly. And when you look at the RSI, this is work by Constance Brown, that she did, and what she noticed is that in bull markets, the RSI on a weekly chart will hold above 40, and on a bear market, it will stop at around 60. It won't make it all the way to 70. So this is, again, is a long-term chart here. We're looking at almost 25 years of data. And so each one of these shaded panels is a year. And so in this case, this was a 4-year run in the US dollar as it's running up here, 1997. And then It made a low, which is exactly the level we're currently at in the middle of the big bull market run. So if there's one point of concern, it's right now, and that would be that we really want to see how the RSI behaves going forward from here. But
yeah,
then
so
it went
there are
on.
some aberrations over the ranges you're showing, but they end up coming back within reverting to the mean. So it's the exception, not the rule, for your major concerns.
Very, very much so. And in 2008, 2009, what we saw on the RSI was it literally swung from 30 to 70 to 30 to 70 to 30.
Yeah.
That is very rare on something as big as the US dollar to go on wild swings like that. Obviously, it was a pretty wild time with the whole global financial crisis, which would cause something that major. But you could see since 2011, which is when we marked our bottom, it took 3 or 4 years to actually kind of declare a bull market, but we stopped hitting new lows on the US dollar and went on to actually give us a confirmation signal. You know, up in here, we were very close to getting a confirmation signal. Obviously, it would have been nicer. We didn't get it, but now we're clearly broken down, not just to 30, but below 30, and that's a very rare.
The glaring divergence between 2015 and the 104 high. You know, I've renamed the RSI to Real Simple Implicator, and confirmed highs normally lead to another price high that may or may not confirm with RSI, and that's exactly what happened in January. It did not confirm. But you knew another high was coming because of what happened in 2015 because of those readings.
Yes, I would
probability.
Yeah. And one of the concerns that we've got in the US dollar is, if you notice that this is a January high. This was very close to a January high. It was December high. The big peak back in 2002 for the US dollar was a January high.
Interesting.
A lot of the major
January goes the rest of the year in the dollar.
Well, not so much the rest of the year, but some of the major highs have taken place right at the end of the year. 2005, it was right at the end of the year. Obviously, 2008, 2009, this was just flying back and forth. But there tends to be either a July high or a January high of consequence in a lot of the years. So I would say that if you go back and look at some of the videos I produced, you'll see that there was I was really watching for a high in the currency right at the beginning of the year, and lucky enough to call that one right. So
lucky.
Very lucky.
You know, why don't you just say this? I'm so proud to announce how humble I've become.
Well, the only thing I know is that we're only right every now and then. So.
Yeah, okay.
Anyway, when we zoom in on this weekly chart, what we see here is, you know, just one of the big clues now is that the momentum is living in a much lower range, and having that big change in momentum is very, very important. So in the last 2 weeks here, we've got a confirmed new bear market signal because we touched 30 and went below it. So just by Constance Brown's work, we're in a bear market for the US dollar. The worst part of a US dollar bear market is we're at the lows, and we would expect to bounce from here, but that bounce would be a bear market rally continuing to lower lows.
Okay, you have any long-term targets on this move, or do you don't even get involved in trying to be Nostradamus for?
You know, I haven't. I don't try to do the target thing. I would be, you know, I'd be looking for reversals in momentum, and a lot of the presentations I'm going to show here are talking specifically about the change in momentum on a lot of these charts, and the fact that they are changing. And so we would assume that the new bull market's probably got years to run in the other currencies and in the other markets if the US dollar has in fact topped. And we could always have an ICBM or something land somewhere that would change things, but based on the charts that I see right now, it looks to me like the rest of the world is trying to rally, and quite a few of these charts point to that. So here on this chart, I have the Canadian dollar in green, and I have the price of crude in brown, and obviously there's two different scales here, so they don't correlate directly, but what you see is that the Canadian dollar tends to lead crude. And it could be because currency traders have a lot more leverage, and so they probably have to make a decision a little bit sooner. But recently, they've broken the Canadian dollar out of the whole downward lows that we saw coming off the back of oil. And so having the Canadian dollar move to new 6-year highs in momentum probably suggests that the lows are in for crude. Now, whether it takes another couple of months to work through that, I have a whole bunch of charts around that. But the big issue here is it would appear the Canadian dollar signaling that the low is in for crude oil as well. And you could see that we got a bull market signal on the Canadian dollar last year, pulled back. Didn't feel like a bull market at 72 cents, and then now we're off to 70 again. So the Canadian market has definitely started to turn and is in a new bull market.
Okay. Concur.
Okay. Here is the CRB, and what we've got for the CRB, this is a 45-year chart with the Commodity Research Bureau. And one of the big problems with this chart is that this is monthly, and one of the big problems with this chart is we recently broke through 45-year support. Yeah. So what is it that is making commodities cheaper now than at any point in time in the last 45 years? Pretty major implication. So there's a lot of people that think there's lower lows coming in commodities, and if there is, we're in for one hell of a deflationary cycle. But one of the things that I noticed is that the commodity markets tend to bottom in pairs, like they come down, they retest their lows and then take off. And so here we are. We don't have to get all the way back down here, but we've got to 166 versus 154, and we spent quite a bit of time at 166.
It's a higher low.
It's a higher low, and a breakout from here would suggest a big new bull market. So you get your higher low, you've got your divergence with the US dollar, and the US dollar starts to break down, and that should send our commodities rising. So one of the things I'm looking for to confirm my US dollar call is that the commodities actually start to rally from here. So the next few charts are going to be about commodities and how they look to be setting up. And so getting into the CRB, this is, you can see that on the CRB weekly, in the last couple of weeks, we've broken through the downtrend that started when oil topped back in 2014. We still have a bear market signal on the RSI. We touched 30 in June, so that would suggest we're still bear market. And that's one of the concerns I have, is that if we're still in a bear market for commodities, even in a US dollar bull market, or in a US dollar bear market, we're really in trouble here. We're probably going to have a big deflationary event. I'm not predicting that. I would suggest that there's enough animal spirits out there that this will actually probably start to rock to the upside. So we're breaking the downward trend here. We're testing the 40-week moving average right now. US dollars at support, so some rally here would be expected. But again, the scale of that rally would probably be smaller and maybe up into the 97-cent range. So in looking back on the US dollar chart, the previous bounces were about 5 cents.
Yeah. Okay, interesting.
So this big downtrend here in the CRB is just being broken in the last couple of weeks. And obviously we got a lot of overweight pressure here with the trend line, the 40-week moving average, previous highs, a year of consolidation. There's a whole bunch of pressure there to get through. But so far, it looks like we're getting there. And one of the things I like, I think I've got it on the next chart, is, I've just left this line hanging in the middle of the air here. And the point I want to make on this, because when I add it onto the chart, it kind of, when I add it onto the chart, one of the things we get is, it looks a little muddled. But what I like is the downward momentum that we've been under for the last 6 months in the commodities has started to break.
Yeah, you're getting across. Yeah.
And it broke very close to the lows. And so I put a zoom panel over here, and we can see that this is broken out just in the last couple of weeks.
That's
so a really interesting place on the chart, and getting that breakout, I think, is pretty critical. And obviously, crude turning up is a big part of it. The thing that I think is happening is all of these commodities have taken time to adjust to the new bull market, but literally it shouldn't be avoided if if the US dollar is in fact going into a new bear market, this is probably one of the most exciting times to get long some of the commodities. So
any the subsectors look more appealing to you? I know that grains were down. If there's any kind of trade friction between Russia and us on sanctions, it affected the grains. Does the energy and metal sector look the most promising to you, or are soft commodities a part of it?
So far, it looks like industrial metals are the nicest chart, and the main copper. I have a chart with copper coming up here, and those charts really start to look appealing, and I'll explain why. This is the DVC, so a US dollar-based ETF tracking commodities. And what we see is we still have an uptrend off the 2015 low. So momentum is improving, but still hasn't broken out. And obviously, it wouldn't take much to get this chart to go bullish. But again, it's still in market mode on the RSI, so a little bit concerned there. So that's a critical component. This is DBA, which is the agricultural ETF, and it's really trying to break out here.
Yeah.
But it's broken support twice. Not a sign I want to see. I like one test of support, not two. So anyway, we're trying to hang in here.
How about 3 tests of support? Do you become very jaded then that Mr. Market is giving people too much time to think about buying a breakout? You didn't do it 2 weeks ago. Here we are again. I'll give you, Mr. Market saying, I'll give you another chance, and then it comes back again. You know, when the market makes it too convenient to react, you become skeptical.
I do. Yeah, I think that it's a dance floor, and sooner or later you fall down. And so enough taps on the floor, and we've got a problem. So the big we've got, you know, kind of a 3-year wedge building in momentum. And so we're very close to either breaking out to the upside in momentum or breaking down again. And obviously a breakdown in momentum again would be the deflationary picture. And again, on EVA, to have the agricultural breakdown, I have some relatives in the business, and you know, they're internally in the ag business, what they say is there's 7 billion people that need food, and we don't have enough land to produce it. So we fully expect the world's biggest bull market in agriculture over the next 20 years, just trying to feed everybody. And so that perspective is interesting, but the charts are saying we're not there yet. And obviously, if things started to break out right here, this would be a great place to get long the eggs.
Okay.
The fertilizers and the, you know, potash.
So being a Canadian, and you started off as a geophysicist, do all of you guys in kindergarten end up with like blood or gold dust on your desk, and you're all interested in natural resources?
Well, if you're a trader in the Canadian market, pretty much. I mean, unless you live in Toronto, there's, you know, we've got 5 major Canadian banks in Toronto. We have 3 other banks, Laurentian, National, and Canadian Western Bank. Yeah. So roughly banks. That's not really like the U.S. And
yeah, you guys actually, you're right. You have a natural affinity for natural resource markets, I've noticed.
Yeah. So, you know, I think we have 700 companies on the TSX, and 2/3 of those are in the energy or oil field services or mining or drilling or diamonds or gold.
Yeah.
Yeah, so it's a pretty big component, and so a lot of the juniors that are traded on the venture exchange and that kind of thing all come through those industries.
Okay.
So here's copper, and what we like about copper is the momentum has been improving. We've actually turned up above zero after being below zero for years, and so this first wave up tells you things are getting going, and right now we're bouncing and breaking out to higher highs. So copper's hit a new bull market, and that's one of the reasons that I really favor the material. So that also would suggest that the US dollar is confirming its new bear market status, having copper break out to the upside, because copper's been called Dr. Copper, but it hasn't really reflected it in the U.S. market at all.
No, I mean, you know, I was watching copper go down, and the other statement about copper is all bull markets are roofed in copper, and it was one of the biggest roofs I've ever seen in my trading career, and it meant nothing.
Yeah,
the bear market in copper meant nothing.
Yeah. So the next chart I've got is oil, and for some reason oil seems to be important at about 95 million barrels a day. What we see here is this RSI is trying to break out the downtrend, so that's interesting. On the momentum, so again, monthly chart, on the momentum, we're trying to break through this downward momentum, and if this was to break now, you know, that's probably the biggest, best bullish sign we'd ever get, that's a confirmation that the commodities are ready to go higher. And this would be a great place to get on board. When we look at the US or at the West Texas crude, the big problem we've got obviously is a series of lower highs and lower lows. And now the real question is, you know, does this go all the way down and test 1999, or do we hold in here, make a head and shoulders bottom and fly out of here? And the RSI is starting to signal that that might be the call, but obviously until we get above 50 on a monthly RSI, we don't know. But I would just say the change in momentum here would be important. So I'm watching crude with great interest for the next couple of months. I think that's probably one of the biggest areas to watch. And here's gold. And one of the things we see about gold is it made its last RSI low on a weekly chart in last year, and now it's making a higher low. And normally, again, if it's going to start bouncing off 40, that's pretty bullish. What we want to see now, obviously, is it go up and tag 70. So what we got here before was we had a RSI signal saying bearish market, swung to a bull market, stayed up there for a while, went all the way down to a bear market. We've shown that in the other charts. But the important thing here is that we don't seem to be making those RSI lows anymore. And so this is a really important place for us to watch. And again, that trend line is about to be broken there. And on the momentum trend line in the PPO, the percentage price oscillator, similar to the MACD, it's just in percentage terms. The big picture here is that gold, it couldn't be more sensitive right now. Really at a critical point. And obviously, you know, there is no momentum line down here that makes sense anywhere near here. So if gold rolls over and goes down hard, you know, I think we could go all the way back down and test, you know, big lows in momentum, like down another 3 or 4% from here, which would be a pretty big stab lower on gold. I'm not expecting that. But
do you prefer to trade the ETFs, Greg, rather than the futures? So you like the commodity ETFs as a trading vehicle, less margin, less leverage.
Yeah, I don't use a lot of leverage. My life has a work leverage. Yeah, I like to put my trade on and be focused on it, and so I don't bother trading in leverage.
Okay,
that's a big probably change for.
That's fine. I think it's smart.
So here is GDX, and this is a different chart than gold. And the reason it's different is look at this momentum trend. Remember, in the gold momentum trend, there was no upward sloping trend. In the gold miners, we have a nice upward sloping trend, and we're just trying to hold above zero here. So we still have a little bit of room to the downside, but a push above zero right here would almost confirm, you know, especially after that big move we got in copper, having gold break out in the next couple of months. And one of the concerns I have is that 5-cent pullback in the US dollar. So I don't know if we have to wait until October. So the dollar runs up 5 cents, kind of puts pressure on all of these things. And then all of a sudden we get a fall breakout in almost everything. So that would be the real question. But the one thing I like here is the miners have a much better upward momentum trend all through this bear market. And, you know, we can all see pretty much a big base building here.
Yes.
Okay.
Like that. Do you come from the school that the shares lead the underlying commodity? So you want to see better performance in the shares, more relative strength in the shares to lead the underlying commodity higher, or vice versa?
That's exactly what this chart is saying. And so here we are, the gold miners versus gold. And thank you for the lead in, because that's exactly what we're talking about. Is this trend line break here in 2016 on higher momentum was an excellent reversal. And as we went all the way up here, obviously we got into positive territory. Now, we're still making a higher low at this point in momentum, I would just say that it, it doesn't get much thinner than this, but we really don't want this chart to start to break down a whole bunch lower.
I was thinking, Greg, if we got that puke job you're talking about in gold and it retests the lows, these shares will not, or the comparison will not, and that would really be a huge macro signal. Just should the bear case emerge one more time, the shares, I don't believe, will confirm the bullion move.
The one thing we do have on this, so the RSI ratio that we've been talking about, has given us a bull market signal and continues to hold above 40. So this would suggest that we're out of the bear market mode in these. And it did not get up to 70 all the way through the big downtrend from 2012. This is rare earth metals ETF, and one of the things I like about it is obviously it's thin, and it's much more sensitive to global economics, and it's really starting to break out to new highs. So rare earth metals will probably all remember the rage that they were on, but we've now clearly got a bull market signal in rare earth metals. It's back up over 70. This is the stock
uranium an important part, and lithium an important part of this?
Uranium really is interesting here. I use URA to track uranium. There's another ETF, NLR, but it looks more at the power plant company, so more like a utility company, whereas URA is more about the uranium miners, and we're still waiting for the chart on Cameco to really improve. Cameco is obviously a Canadian company, so we're a lot of Canadians are focused on it, but they've got some accounting issues where they've got about a 20-year fight with the Canadian government on how they recorded stuff, and so that chart is muddled from that perspective. But if we start to see URA chart break out, and I could just pull up a URA chart, let me grab it. What we're waiting for here on this chart is, we had this big surge last year, pulled back, and we're back above the 200-day moving average, but we haven't really broken out. And if I just go to a weekly chart over here, what we see on uranium is this is definitely trying to build a base, and momentum is just trying to bottom out just below zero, which is fine for a new bull market. So looking for this to improve, and this line up at the top here is called the Scooter Stock Charts Technical Ranking. It's currently in the low 10% of ETFs, and if this will start to break out of this low base, usually it's a pretty good place, especially with a positive MACD, to expect great results. So, getting back above the 40-week moving average is a big help. Obviously, we've broken the downtrend, so now we're making higher highs and higher lows. This looks like a really nice place to get on board, especially with the MACD starting to turn positive.
So, Greg, what's your business model? Are you looking for subscribers? Do you manage money? What is your business model to the retail public?
So Stock Charts pays me a wage to write, and I comment about commodities and all that kind of stuff. So the one thing that we're looking for is that Stock Charts is an easy platform for people to use to keep track of their charts. We've got a couple of exclusive indicators, not proprietary because we tell you how we calculate them, but we have some exclusive indicators like this Stock Charts Technical Ranking. Again, I did my master's on that, and it's we have some stunning indicators. This Stock Charts Technical Ranking really improves my trading, but either playing it as a breakout from really poor or getting into the top quartile of investing or a price action, it can stay up there for months and make you a lot of money. And when that stops being up there, one of the charts right now would be QQEW. The equal weight ETF is just starting to break down, and when it doesn't stay as a top performer anymore, it's a pretty good place to be aware of. So right now this chart's breaking, and that would tell me that
NASDAQ 100. So
NASDAQ 100 equal weighted, yep. Okay. And so not putting all the weights on the five giants, and so. This scooter ranking, you go look through this chart, it's a pretty nice place to pay attention to, and when it can't stay above 75 anymore, usually that puts some pressure on the overall market. So I like it just as Yeah. So the stock charts website that I work with, we have subscribers that just pay a monthly fee anywhere from 25 to $50, and $50 gives you, 100 years of history, and it gives you 500 charts per chart list, and I have 320 chart lists. So I use a lot of the site. I use most of the dynamics on it. We have relative rotation graphs from Julius to Kempenaar as part of the site. I don't know if you've ever used those, but they're a tremendous tool. So if you just if I was to go to the free charts page, and anybody can do this, this is free. You could just go in and go down here and grab relative rotation graphs, and this is probably one of the best relative strength tools in the visual world. You can just take this slider and extend the lengths of the lines on here, and you can animate the chart. What it shows is we have the S&P 500 in the middle here, and how the other markets are performing relative to the S&P, and who's leading. And obviously, over the last year or whatever, the NASDAQ, so here's NASDAQ Composite, has stayed on the positive momentum side. On the positive momentum side is up here, and on this side is the relative strength ratio. And we can just take this slider and move it, and what we see is the NASDAQ has been a pretty strong performer, right? It just continues to stay in this top right-hand side. It pulls back, and then it accelerates again. So some of these tools are sitting there, and so the model for everybody is to just, use the website and save all your work. So I have
yeah, you have a lot of time-saving features here, and you're a great technician, Greg. I really enjoyed your looks, and I've seen some indicators that I haven't seen before. I want to thank you for edifying our community today, and hopefully we could get back together again and see how some of these things are progressing, perhaps later in the fall, my trading warrior brother.
Sure. Let me show one more chart, and the only reason I want to show it is because sure. I think it's probably critical coming up as we go forward here. I just want to go grab this. These are my chart lists, so as you can see, there's a few of them. What we see here on this one chart is that Europe is, everybody's talking about the big breakout in Europe and that kind of thing. I think this chart is critical, and so this is the Stocks 600, not priced in US dollars, compared to the S&P 500. And what you see here is, considering that market is supposed to be so bullish, we're making new lows in relative strength. And so in a US dollar ETF, some of these markets are breaking out. So EWG is breaking out. EWJ, which is Japan, has broken out in US dollars because the US dollar is falling. But
right. So they're nominal gains.
Yeah, in relative strength terms, they're actually, the European 600 are underperforming the S&P 500 in their own currency. So it's a pretty important clue.
You better send this chart to Jeff Gunlech, who's short S&P, long Europe. Jeff Gunlech,
yeah.
the bond guy. Anyway, right. Yeah, because he's the other way. So and you can help him.
Yeah. Anyway, so that's kind of the big thing that I think everybody should be aware of is just that in US dollars, everything looks bullish worldwide. The problem is in real dollars, in their currency, local currency, this is underperforming. The Canadian market's underperforming, the Aussie market's underperforming, the Russian market's underperforming, the Brazilian market is close to outperforming. So those commodity markets really have to start improving if the US dollar is in fact in a big bear market. And watching the relative strength of those markets versus the US stock market, they should start to turn up if this is a new big bull commodity market. So
thank you, Greg. My trading warrior brother. I wish you a lot of success with a lot of the things that you're seeing, and appreciate your time and sharing your wisdom with F.A.C.E today.
No problem. Thanks a lot. If there's any questions, you can email them to me directly at at gregs@stockcharts.com, and feel free to go check anything out. And if you have any questions, give me a shout.
And also can follow, I recommend you follow Greg at Schnell Investor is his Twitter handle. And then you'll find everything else.
Thanks a lot.
All right, nice meeting you. Good hunting, Greg.
Thanks, everybody.
That's it.
Bye-bye.
That's a wrap for F.A.C.E, everyone. Good hunting. Remember, don't just count your pips, count your blessings. Ran a little bit over, but Greg Schnell was worth it, wasn't he? So everyone thank Greg, and we'll see everyone for TGIF, which includes the NFP. We'll be here for the NFP tomorrow. And then Chris Laurie to wrap up the week. Good hunting, everyone. See you tomorrow. Thank you, Arif. You're welcome, Kevin. See you, Stephen.